All right, good morning. Welcome back here to Trader Minute. Great to have you aboard. I was not planning to be on video here this morning, but with what's going on there in the market, we are seeing some what I will call game-changing news. Now, the last time we saw game-changing news that was metric moving came the day after the Fed, when the U.S. Announced further tariffs on Chinese goods, and that happened right here. Okay, and you can see that this morning's news is taking the market right back up similar to a similar spot to where it ended after that trade war news. So it is dealing with the trade war. It is a big bounce in the market, here this morning, and a pretty vertical bounce, and perhaps most importantly, a massive volume bounce. Just monster volume here. In fact, if I pull up S&P futures, you can see we've been having high volume days overall, but this morning the volume is only rivaled by the bottom and by the 2 days of both Fed and tariff news. So monster volume coming in here this morning to the markets, and rightfully so. And why is this news game changing? The news is game changing because this is one of the first times that we see the U.S. showing any sort of concession when it comes to the trade war. We haven't seen it. We just haven't seen it. We have seen strong arm tactics, strong arm threat, follow through. We've not seen a backing off. And I chuckled at some of the news articles that I read. In fact, one of them, it says that the U.S. announced or goods that would not be included in the tariff list. For national security reasons. Some of those goods include cell phones and video games. And apparently, I guess video games have national security implications, but, who knew? Anyway, it is a game-changing, type of move here this morning. And so I want to jump on, talk about how it affects the challenge here, and potential signals to come in. Before I do that, I am running the scan for signals right now. It should be coming up here in 20 seconds. There wasn't anything on the board on the initial jump. I thought Microsoft might have a chance to signal this morning, but it is simply one of those things where the morning algorithm is tighter than the afternoon algorithm. We've talked about why and all of that many times. Let's see. Okay, yeah, no signal on the board here this morning, Microsoft, if it were the afternoon session, would be a signal. A few others with some potential. So let's go take a look at them. We have been with a lack of signals for what feels like forever now, and through a lot of this market chop, we didn't get downside signals when the market kind of made that 2-day drop. We didn't get upside signals when it made the 2-day pop, right? In that kind of just choppy element. Yesterday, I thought, man, okay, come on, we got to see some downside signals. Something like a UPS, had a downside 3-7 crossover on it, but didn't qualify as a signal. Verizon downside 3-7 crossover didn't qualify as a signal. And you can see that most of the stocks, when they've had a downside 3-7 crossover, they've gone up. When they've had an upside 3-7 crossover, they've gone down. And so the question comes is this morning's news, is it enough to, be game-changing for these various stocks and for an opportunity to get in? There is one thing major happening. The VIX is dropping back on down, giving up yesterday's gains very nicely. Still elevated, but it is reversing in a pretty big way here this morning. For those of you who are with me with the VXX, I did sell mine this morning on the pop. I got out, said, I'm done. Why did I do it? Because I saw the news and I said, nope, this is game-changing news. This is not, oh, well, we got a little bit of news from the Fed and the Fed might do that. No, this is a This is a very big change in action and behavior here from the U.S. And, for me, it absolutely opens the door to, further talks with China and, something that, could ultimately, the market could start to price back in a trade war resolution. And if the market prices in a trade war resolution, we're talking about new highs, coming into the markets. But let's go through the watch list. Let's take a look at it because there's some, there's some very interesting action. Things like an Alcoa, right? We're not going to get a bullish signal. Why? Stock set a new low, right? It set a new low. Even if it has a 3-7 crossover, it would be similar to right back here in June. We're not going to get a bullish signal off of that with the way the algorithm's designed. It's just not designed to give bullish signals off of new lows. It's not designed to give bearish signals off of new highs. Why? Because most of the time when stocks are coming off new lows, they're just small bounces. They're not new upward trends and vice versa. Coming off highs, they're not new downward trends. They're just kind of, relief pullbacks. Here's American Airlines. All right, we're not going to get a bullish signal with the stock coming off of pretty much new lows. So things like that they're out the window. But if you take a look at something like an Apple, we could get a bullish signal here on Apple. Now this one here, has an average true range of about 5, and it's basically moving 2 average true ranges on the crossover. So, to set a signal, it's probably getting outside of those parameters, but has the principles of it in play. And Amazon, there are a lot of stocks out there like Amazon, and these are really interesting to me because I like this type of chart pattern. From a bullish standpoint, I like this kind of bounce off the bottom, small pullback, and then engulfing type action. And a lot of times we'll get some nice follow through on that type of action, and we see it come in, from time to time in the markets, and it's one where we're going to see this pattern pervasive throughout a lot of the stocks on the watch list. Now, Amazon doesn't quite have a 3-7 crossover here just yet this morning, but if it does, it is one that I suspect could be on the on the buy list here for the challenge. Arconic, it had a 3-7 crossover last week, and this stock has held up extremely well, but it's just one where the options they're just not tradable, and it's no fresh cross on it. So you'll notice most of the material stocks, the chances of seeing a signal in that group very, very slim given the chart setup. But then we have a Boeing, right? This Boeing is set up. What's this look like? Has that similar setup to an Apple. Now, it is coming off of a new short-term low, right, which kind of retested the lows here from June. So I'm not convinced we'll get a signal out of this, but in all, we have that same type of pattern that we do with Apple. We have stocks like Baba and JD, both on the watch list. We saw JD earnings last night, and both of these are moving up sharply off of earnings. And something like a Baba here, it's basically it's in the last 48 hours. It's moved well over 2 average true ranges to set the signal. So when we see that, a lot of times we'll see this type of action from back here in October, where we get a huge move. Yeah, we get the crossover and everything, but the odds of further follow through are slim. We tend to get through a chop element there with them. So probably not going to see a signal out of a Baba or a JD with how they set. A Bank of America, you'll notice similar pattern to a Boeing, to an Apple. Doesn't have a 3-7 crossover on it. We'll see kind of if and when it does what that signals, but we're probably not going to see anything from the banks. Bristol Myers, no. Caterpillar, throw this with the material stocks. We're not going to get a signal off today's action. We don't have a fresh crossover. We're coming off of new lows. And so while I think if you're bullish on this news and you want to play this news higher, well, I think Caterpillar is the best way to play it. We're not going to get a signal there for the challenge on it. Conoco, I'll throw that in the materials. It's energy, CSX, rail coming off new low. Stocks coming off new lows just are not going to create triggers here. Chevron's an interesting one. This is one where I think if you want exposure, I've talked about this many times. If you want exposure to the energy market, you buy Chevron. You buy Chevron. Chevron is the best, and it is the one that's going to hold up the best. You can buy Chevron. You can short the XLE for a hedge, and you're probably going to outperform, the entire energy complex holding on to Chevron. But we're not going to get a 3-7 crossover come in on it here today. This is one that had a crossover on Thursday of last week, but it moved more than two average true ranges to create that crossover. Right, and you can see what it's done since. It's just 3 days of chop, chop, chop nonsense, which is what is commonly seen after those 2 day, big pops there. Delta Airlines. This doesn't have a 3-7 crossover yet, but you'll notice that similar pattern to a Boeing, to an Apple, to a Microsoft. Could easily, come into play. Triple D, which is going off the watch list there. It's just not tradable. Disney. I'd love to trade some Disney for the challenge, but, this action this morning, not nearly enough to create a crossover. EOG Resources, the same. Then we get to Facebook, right? And there's a common theme here. Tech stocks have some 3-7 crossover action coming in. And, Facebook, this is a very similar chart to Microsoft, to an Apple. We have that 3-7 action coming in. We're not coming off a new low. We're coming off of a higher low. This is a very bullish chart, and one that I'd be very surprised if it holds up today that we don't see a signal come into play. Now, it's still below a falling 200-day moving average, or 20-day moving average, which, could come into play. But it is, it's kind of with the rest of that tech space, and pretty nice pattern there. Then we have FedEx. And, FedEx is in a position, and you know where I stand with FedEx. I'm not overly bullish on FedEx, but FedEx is in a position where if it gets a crossover, I strongly expect that it would be a bullish signal. It has been putting in some higher lows here of late. Doesn't have the crossover here just yet, but we'll kind of see how that comes into play. Gold, a lot of action in gold right here. Just a lot of action in there as some of the fear unwind is happening. Halliburton, which is Halliburton below 20. That just feels wrong. Hal under 20. But man, it certainly deserves to be under 20 with how the company has performed. Home Depot, potential 3-7 cross here, but you'll see just a little bit short here this morning. Then there's Honeywell. And Honeywell has a 3-7 cross coming in on it, coming off of this low here, right? So it is coming off a new short-term low here with the stock. But this is one that I would not be surprised to see a signal on later today. But we'll have to see. It's not there, this morning. IBM, this has had a pretty hard pullback, with the, some more news and announcement on the Red Hat acquisition. But no crossover, involved there. Intel, no crossover action. JD, I mentioned earlier when we saw Alibaba, has the crossover, but it's moved more than two average true ranges to get it. And that's due to its earnings that it reported, which were pretty solid. Excuse me. J&J, this is an interesting one. This is one where I'd love to play J&J higher, but we didn't see a bullish signal come in last week on the 3-7 crossover to the upside. But on the down days this week, it's held up, or the last 2 days, it's held up really well. Getting a nice little pop in it. It's a chart I really like, but isn't going to trigger for a challenge. Signal here. We get into the banks. JP Morgan looks same as Bank of America. No chance of setting a signal today. Coca-Cola's no chance, right? And you can see we start getting outside of the tech area. very, very small chances of setting signals. Now, one exception is MGM. MGM does have a 3-7 crossover here on it. We did see a lower low come into play here with MGM, so I'm not quite sure how that's going to, factor in here for the algorithm. But moving above the 3, the 7, the 20-day moving average altogether here, we could easily see a signal on MGM later today. Triple M, kind of similar to a lot of those other things on the bottom. If you're going to be a buyer today, I don't know why you'd buy Triple M. There's so much other good stuff to buy that, buying Triple M, why bother? But Microsoft, here we go. Microsoft is pulling back, here since, on video. And one of the reasons why it's just, to get a trigger early in the morning, the parameters are tight. They're tight, and they have to be because too often they're just morning whipsaws. So it is just one where if it were to close here, I strongly suspect it would be a bullish signal, but we'll have to kind of see how that plays out the rest of the day. Micron gapped up this morning, with the market indicated to go to open lower. Micron actually gapped up, but we do have a 3-7 crossover, coming in on this. It is making a move that, it's gone from 41 to 44 in the last 2 days, more than 2 average true ranges. So, very slim chance. But you'll notice tech, right, a little bit stronger. Netflix, no crossover associated with that, as it's, no longer trading like a tech stock, in general. Big move on Nike, and I think this is a move where, if you look at the news cycle, you think, okay, companies that could benefit the most, you have to throw Nike in there. You just have to throw Nike into companies that benefit the most. It does have a 3-7 crossover on it. We'll see if it signals. I'm not quite sure, simply because the depth and the magnitude of this pullback, we may not see a signal come into play here with it. Pepsi, which had a 3-7 crossover last week, but coming off a new short-term low, isn't going to give a signal there with it. Procter & Gamble, this is just one that's just been on an absolute tear. We played this early in the challenge, pulled a couple bucks out of it. Since then, it's just not one that has big up days, but just slowly over time, just continues to rise nicely, and whatnot. Now, Raytheon is not on the challenge watch list right now. We took it off when they had the UTX acquisition. Wanted to see how it all played out and, how it performs going forward. We did see a bullish signal, though, come in on Raytheon last week. It has not performed well with that bullish signal. So it's one that, still in the testing ground, again, because of that kind of change in its nature there with the UTX acquisition. AT&T hitting new highs. I know AT&T slow, boring, nothing too exciting to look at, but we've talked about this one all year. One of my favorite investments in the market right now. And then Target, big update here for Target. Big move on Target. And one that just absolutely sets up a bear trap. And what do we know about bear traps? We know that when bear traps are sprung, stocks go to new highs, and I would not be surprised to see that out of Target. Now, the stock is moving almost 2 average true ranges to kind of create this crossover, so it's not going to give a bullish signal, with that, but, very nice action. Twilio, not really going anywhere. Finally had a more substantial pullback, but we've not seen a whole lot of life come back into it here since their earnings report. Twitter, this is one that had a downside 3-7 crossover yesterday. I was kind of hoping we'd see a bearish signal because I wanted into something, but we didn't get a bearish signal. Today has a 3-7 upside crossover. It could trigger bullish. We'll see here by the end of the day, but in that tech area, as well. Under Armour, we talked about it on earnings. It deserved to go down. It deserved to get sold off. Absolutely deserved it in every way, shape, and form. but it's also one that you can look at the long term of Under Armour and say, hey, the long term is not all that changed based off this earnings report. And we talked about this action back here in December, gap down, sell off, and then stabilize and rally. And this is what I expect we will see this quarter. And I think today could be one of those interesting days of starting to create a base, right? And ultimately, I do think this stock rallies back to 24 before its next earnings. And one I'm very bullish on below 24. But, again, no real signal yet. It needs to have the sell-off. It needs to have some basing. So I think that's all we're looking at, here so far. UPS, kind of in that same boat as FedEx, upside 3.7 crossover on it. This had a downside 3.7 crossover on it yesterday. But definitely outperforming FedEx, right, here of late. But could set a signal here by the end of the day. Visa, which I've made no secret about. I like Visa. I'd love to play Visa to the upside, but we don't have that kind of 3.7 action going on it, right here to be able to play. And then there's Valero. And Valero, this is an interesting one. This is one where we got in right back here for the challenge. And, and then while, yes, the challenge parameters were still there, and according to the challenge, I should have still held, I decided to pop out on this day. And because we saw the game-changing action in the market. So I decided to pop out, said, you know what, I'll live to fight another day, and, pretty much sold out of it, break even. But we still had this very bullish chart pattern, in play. And the market sold off the next 2 days. Valero got absolutely hammered. But we weren't seeing anything game-changing for Valero. Now, Valero's been trying to stabilize here, and is one that, if it's able to stabilize here, does have a higher low in play. And we could easily see a bullish signal here on an upside 3.7 crossover, and one I would love to play again, but it just doesn't have the crossover action on it here just yet, so we'll have to be patient. Vulcan Materials, which is kind of like Procter & Gamble, just very different industry, just continues to go. We haven't seen signals come into it. The action hasn't been in and out enough, to create a signal there with Vulcan. And then we have Verizon, which, had a downside 3.7 crossover yesterday. Today, it's, rallying here a little bit, but Verizon's been absolutely stuck in the mud, as far as movement goes. All right. And then, not last, but probably the last interesting one, Walgreens here. This is very much a FedEx chart. Right? It looks very much like FedEx, and this could signal here today. We'll see. I believe the volume pattern on Walgreens is pretty bearish for the algorithm, so we'll kind of see how that plays out here with it. And then Walmart bouncing, with Target, but Target outperforming, in terms of the pullback and bounce action, at least so far here. Then U.S. Steel, which is like most of the materials, just bouncing off the lows here. So, very easy to see where the action's happening. It's, within the tech space, a few of the industrials like a Honeywell. And so all of those are in play for, potential signals here this afternoon. We'll see how the market, reacts, how things kind of hold up here today. And, one of those where I do expect we'll have some, a few dips and rips. I think the most bullish thing that could happen for investors, into the end of the day, is to see a pullback here, maybe to something like 29.10. A little bit of bounce back up into this area that it is right now, and then flat the rest of the day. And I think that would be a very bullish scenario for investors, but, obviously we'll see how it all plays out. One thing that does concern me about this morning's action is the fact that bonds are not moving lower. We had inflation data. In fact, here, let me show it to you. We had inflation data this morning, and let's see if it'll come on up here. Maybe. It's wanting to be a little bit slow. My apologies. All right, so we had the CPI, right? Consumer Price Index here this morning. And, this is one that the Fed uses, to kind of, to create policy. It's inflation on the consumer side, kind of how, you and I see it day to day as we go to the store and things like that. It's not the producer side of things, it's not the business side of things. It's much more the consumer side of things. And if you look at CPI less food and energy, year over year change came in at 2.2%. So Fed is targeting 2%, and it came in a little bit hotter than expected, and we saw that, even with food and energy added in. So, slightly hotter than expected, and yet still bonds not able to sell off. We get the news that we got, in terms of the U.S. and China, the U.S. tariffs, and bonds still not able to sell off. That's a little concerning. Right, that's a little concerning. It'd be nice, from a bullish standpoint, it'd be nice to see some bonds pull back. But this is partly the market just simply pricing in and telling the Fed, you guys better lower rates or we're in trouble. And, it's one where we are in an absolute raging bull when it comes to, the TLT and these bonds. And, this morning's news, not enough to put much of a dent in it, even though the news that we saw this morning is news that we've seen before and seen strong pullbacks on the TLT when this type of news has happened. So that's, one kind of concerning area there. Very interested to see how the metrics shift today, right? Bullish percent index. We're talking about a huge rally this morning. The bullish percent index has hardly changed. Monster rally, but almost no change there in the bullish percent index. If we look at the number of stocks trading above the 7-day moving average, we have seen a change in this, right? And it's changing in a way where it's changing rapidly enough to suggest something significantly more bullish about this move than some of the other moves that we have seen here of late. And if we look at the number of stocks pushing above the 20-day moving average, we're still in bear territory. So we're getting the 7s. We're not getting the 20s. We're getting, some upside action, but we're not getting a change in the bullish percent index. And so, there's still, a little bit of jury out, when it comes to the price action here. But, when we look at what has happened, when we look at the incentives, fund manager Tom, and now he looks at what's going on and looks at the landscape. Does he have a little more catalyst, a little more reasoning to go and buy a few things? Yeah, he absolutely does. Absolutely does. And while, this initial pop here, this is driven a lot by the algorithms. This isn't all, human action. It's one where, the humans are going to have to come in and start making decisions. And very interesting to see what the humans start to decide as the day progresses here. Thanks for hopping on. I'll be back on with you here this afternoon. Hopefully we'll have a chance to trade Microsoft or Honeywell or, one of those that we've taken a look at, here this morning. And we'll talk to you then. Take care.